Are they not investing because barriers are high in their country, or because they don't need to invest for retirement because the government's going to take care of them?
That's a great question.
Or both, or a combination of A and B.
Well, I think that it's largely structural. So the idea that they don't feel like they have to. I mean, that is, we're getting to like one of my exceptions to the, hey, it's great to be an American investor rule, which is so when we are investigating new markets and looking at entering there, we try to talk to as many people native to that country as we can.
Yeah, when the Motley Fool wants to expand.
Exactly. And when we went into Germany, for example, and I would get the common refrain was, well, why do you want to talk to me? I don't invest. And I said, well, that's exactly why I want to talk to you. Why don't you invest? And, you would hear the answer was like, well, I've got universal health care paid for by the government. University education is free in Germany, paid for by the government. And the what they call pensioner benefits, retirement benefits, tend to be much more generous in Europe than in the U.S. And so the idea that you couldn't live off of whatever Social Security pays out, Robert, $800 a month.
Yeah, the average annual benefit is around $16,000 these days.
So like there's a fair amount of investing based on fear of the future in the U.S. and the fact that tuition costs are rising, so you need to invest for your kids or grandkids' education if that's what you want to do. Retirement is not certain, and the government benefits here aren't that great. And healthcare costs are another major anxiety source for Americans, and so you need sort of rainy day savings, and the best place to sock it away traditionally is in the stock market here. That's not the case in other countries. So I think there is a large structural reason for this lack of awareness. But, I would argue there is a risk associated with investing in the stock market. There's also a giant risk in expecting the pension benefits that you might get in Germany, for example, today to be exactly the same as when, a 30-year-old is going to retire in 30 plus years. I think we are seeing, and there's rhetoric around the instability of the social safety nets in these countries around the world, and I think you'll likely see more and more put in the hands of the individual.
Well, many of these countries have the same demographic issues that we do.
Yep.
In that here in America we have the baby boomers who are going to be retiring and not enough workers coming behind them to pay the promised benefits. Most European countries have the exact same issue, if not even worse. Japan has the same issue.
Yep.
China has the same issue because of the one-child policy. So I think you're absolutely right that anyone you can't bank on getting those benefits, whether in one of those countries or even if you're in the U.S. and you expect to get a pension, a traditional pension. The same issue is going to be happening 10, 20, 30 years ago, it's actually already happening to some pensioners. Just ask the people who retired as employees of Detroit. I mean, you just cannot bet on government benefits being the same decades from now.
So doing nothing is a risk in those countries, and I think it's one that people don't fully appreciate. There's also a lack of, this is a completely self-serving point, and I'm happily admitting that up front, but there's also a lack of financial commentary in a lot of these markets. I mean, you get business press, and certainly there's a pretty robust and established business press in the UK, in Germany, in Singapore, in Japan, Australia as well. You don't have a lot of people like us, though. This is the self-serving part, who are like, pounding a drum, talking about the historical returns of the stock market and the idea that the longer you own stocks, the less risky they actually become, and the idea that while they're risky in the short term, they are better than any other asset class. I mean, it is historically proven, going back whenever Robert Shiller's data goes back, 1871 or something. I mean, we're coming up on 150 years of this, and it's true. And there aren't a lot of people banging this, loudly from a drum. When we entered into Germany, which was about August of 2014, we put up almost like a Jerry Maguire-esque manifesto called Why You Should Invest in Stocks. The German stock market, the DAX, has gained 9% annually for the last 30 years, including dividends, which is roughly, we use that sort of 9 to 10% rule for the U.S. Market. And obviously there are a lot of factors, valuation, dividend yield, et cetera. But, 13% of Germans have actually been along for the ride there. And directly, I should say. Certainly there's institutions that are doing it on behalf of Germans. But I think that's a shame. And I think that, again, a self-serving point that the fool is banging that drum loudly in ways that you don't really hear from other parts, from people who have a silly name and wear funny hats and aren't afraid, in fact embrace giving opinions. The business press in most other countries tends to be very much like objective journalist kind of approach.